So using ADA to stake from a technical perspective is what holds up the integrity of a blockchain, and means that transactions are validated in a timely manner and that the blockchain continues to run smoothly. But of course, in order to incentivize the creation of staking pools, and then for investors to delegate their ADA to those pools, there are also financially beneficial rewards to staking as well. And assuming that the investor is delegating their ADA to a pool and not starting their own pool, which will be the case for most investors, their annual staking reward is around 5% at current price levels. And actually a 5% rate of return is a fairly good yield, as if we look at a mainstream stock market tracker like the S&P 500 for example, the dividend yield is around 1.5% or a far cry lower. But this 5% yield isn't where the significant potential for gain in staking lies in my view. When the investor is staking in a project which they believe to have good long-term potential for fairly significant price appreciation, there are certain long-term financial benefits which most investors ignore or simply miss altogether. Take me for example. Although I no longer hold any ADA personally, I still own a fairly substantial amount through a limited partnership with a friend who is also a crypto investor, and we made our first purchase of ADA in this fund about a year ago or maybe a bit sooner. Now the first benefit to this arrangement was that given that we both agreed to hold indefinitely, the staking reward is effectively a passive income, because we aren't spending any significant time or effort managing the investment, and the dividend is effectively generated without our intervention. And of course, passive income is a great way to build a portfolio of any kind, but if we know that we want to hold for the long term, our dividend can be reinvested, and so our holding will grow exponentially due to the effect of compound interest. But even still, this compounding effect on a passive income source isn't the number one thing to consider. Actually, there is another huge benefit to staking in a crypto which an investor believes to hold significant potential for long-term price appreciation, and I think that it's better to explain this point through example than by theory. You see, when myself and my friend set up our investment partnership, partly because of foresight and good timing, and partly because of luck, we happened to enter ADA almost exactly at the low of the previous bear market, and actually we paid just over 3 cents per unit, meaning that the price today is over 10 times higher than the price which we paid for our investment. And while we did expect that the price would rise fairly substantially eventually, we didn't think that it would be so soon. But anyway, at current market price, the annual staking reward is equivalent to around 5% on price. But remember that the investor's dividend yield isn't based on market price at the time, it's based on the price which they paid. And in our case, we paid around 10 times less for our holding than it's currently worth at market value. And so because the dividend yield at current prices is equivalent to 5%, our real dividend is about 10 times higher and is actually above 50% per year, meaning that within just 2 years we could get our initial investment back and enjoy what is known in the real estate industry as infinite return, a term which refers to the point after which an investor has gotten their whole initial investment back but still owns the asset. And so all income from this point on is of an infinite rate of percentage return, or the investor could reinvest the proceeds as they receive them, which is the option which we have chosen. Now admittedly, we were fairly lucky in that although we did perceive long-term price appreciation to be a likely event, of course we didn't know that the point at which we happened to get in would be about a week before the market reversed the year-long bear run which it had been stuck in. But the principle remains the same, in that if an investor is staking in a crypto like Cardano which they believe to have significant potential for long-term price appreciation, and they are holding for the long term, assuming that they are correct and eventually at some point the price of the currency rises a lot, then not only will they benefit from a passive income and the compounding of their holding if they decide to reinvest the proceeds, but they will also experience significant price appreciation, meaning that their real dividend yield will multiply many times over, as has been the case with the holding which I jointly own through an investment partnership. Now naturally, as with any other investment strategy, there is risk and it shouldn't be ignored, but with the passive income from staking and potential for price appreciation and therefore increases in staking yield in real terms, you can see how this particular investment strategy has a lot of potential for what could well be phenomenal long-term returns. Anyway, that's all for this video. If you like what you just heard, be sure to subscribe for more content like this. Thanks for watching.